ladies and gentlemen. Good morning, and a very warm welcome to CFA Society Greece's panel discussion on how ESG, environmental, governance, social and governance practices can create value for corporations and society. I'm Violeta Spyropoulou, the president of CFA Society Greece, and it's my great honor to chair this panel. CFA Society Greece is the official member of CFA Institute in Greece. CFA Institute is the global association of investment professionals and is considered the thought leader of ESG issues, developing focused research and continuously educating investment professionals. Today, I'm really excited to be joined by distinguished speakers who have global experience in sustainable finance and help us explore from their perspective what it means for global investors to put non-financial considerations and specifically ESG, environmental, social, and governance considerations at the heart of their investment strategy. In the way they are sitting, I would like to welcome Paul Moody, Managing Director of Global Partnerships and Client Solutions at CFA Institute, Omiros Sarikas, Managing Partner at Brookstreet Equity Partners, and last but not least, Dimitrios Batzis, Head of Greece, Cyprus, and Malta at Schroder Investment Management. Welcome, and thank you all for participating in today's discussion. We are looking so much forward to your insights. There has been a growing debate in the last couple of years about whether ESG criteria are value-enhancing for companies and investors. Some have claimed that this is just losing money to save the planet and make the world a better place. But others believe that ESG criteria can be linked to positive outcomes and are a significant contributor to companies' long-term success. Recent developments in ESG include increased regulation, mostly in EU, the continued growth of inflows to ESG investment funds, record high levels of sustainability debt issuance last year, increased engagement from investors and employees on ESG issues, as well as the growing hiring of newly formed sustainability units in large corporates and asset managers. These developments point out to the fact that ESG has gone mainstream in the investment community. In addition, prominent global asset managers have repeatedly said that ESG issues have become much more important for us as long-term investors. For example, we have witnessed the global investors' growing interest in the investee companies project on climate pledges, net zero targets, protection of human rights, and effective and diverse boards, as well as executives' compensation. I would love to get our speakers' insights on this subject, so without further ado, let's get started. Paul, I would like to kick off our discussion by asking you the following. Given your experience from your current role in CFA Institute and from your long-standing expertise on ESG in previous roles in asset management business, has ESG become mainstream in the investment community? And lastly, what is your view on ESG growth trend going forward?
I think in terms of ESG becoming mainstream, I've definitely seen that. I've worked in asset management for 22 years and only recently joined the CFA Institute. During that time when I started out, initially, this was very much a new concept, and I used to refer to a quote by Schopenhauer saying, in the revelation of any truth, there are 3 stages. The first is to be ridiculed, and that's where we were 20 years ago. The second is to be violently resisted, as we've seen really for the last 20 years. And then more recently, is to be seen as self-evident. Every single CEO of every asset manager in the UK is now looking at ESG and environmental considerations specifically as a key part of their investment program.
Thank you. Now, I would like to turn to Omiros. Omiros, it's your turn now. I would like to hear from your perspective. Have you seen increased adoption of ESG criteria in our industry?
Hi, Violeta, and hi to everyone. ESG right now is the #1 thing in the UK, right? And I believe there are a few funds in the audience, I can recognize some familiar faces, who are subscribed to the principles of responsible investment. And I'll give you just a number, 150 trillion. I hope that's enough. 150 trillion have been subscribed to the principles of responsible investment. This is the era of ESG. It's nowhere near what we thought it would be. It's the #1 priority, and it has been integral to every asset allocator and fund manager for the last 3-4 years, and it will get stronger and stronger.
That's a promising figure, thank you. And now I would like to turn to Dimitrios to the same question. From your current role in Schroder's and us ESG, also representative in 16 countries, are asset management firms currently integrating ESG in their strategy?
Yeah, definitely they do. And this is something which we as a global asset manager, we cannot think of being part of markets or being investors without having the consideration of ESG. ESG is something where we try not only to engage with companies in implementing in this kind of filtering of risks into their own DNA, but also in our investment decision process. So overall, if you look over the evolution of the investment industry, we had different kind of steps, and we think we are now at a turning point where it is not enough anymore to have a risk-adjusted returns, but you really have to consider the impact of that. And ESG is the expression of these kind of risks where companies and investors need to consider and need to take into their decisions. Because otherwise, the externalities, especially to society and to environment, will be tremendously. And our research showed that actually stranded assets will be so important for the future, especially for the earnings for shareholders. And having this in mind, the future is definitely on the ESG side.
Thank you, truly. Then you gave us a promising message about the progress obtained and the outlook of ESG integration in asset managers' investment philosophy. Now, a crucial point I think we need to answer is how can asset managers drive change, and what do investors need to do to promote the sustainability agenda and contribute positively to society? Paul, do you want to start first?
Sorry, the question.
How can asset managers drive change, and what do investors need to do to promote the sustainability agenda and contribute positively to society about sustainability?
I mean, essentially, asset managers provide the oxygen and the lifeblood to markets and the allocation of capital. And the allocation of capital to drive decision making. So we have a critical role in terms of sorry, just distracted with the sort of talking over there. But yeah, so in terms of the role of asset managers, an asset manager's role is absolutely critical in the allocation of capital. When you look at the estimates, they're estimating, for example, to get to net zero by 2050, there will need to be an investment of 20 trillion. So we're throwing out some big numbers between us today. And that money has to come predominantly from private markets. So we have a key role to play in that. And it's also essential, really, to deliver strong investment returns. Lots of asset managers are already starting to consider environmental and social considerations in their valuations, but it intuitively makes sense that a company that manages their environmental risk, manages their social risk, is going to be a well-managed company. And that's been demanded from all of the stakeholders now, from shareholders, from investors, from their own staff and employees within the company, and also consumers. So there's risks and opportunities around all of that. And I'll stop there in the interest of time.
Okay. Omiros, do you agree? Would like to hear your view on that.
Well, I think, first of all, I don't think necessarily ESG is sustainability only, right? We're far, far away from that. So E is not just environmental. Social is not just about what you do for CSR. It goes beyond that. Workforce management, automation, AI, for me, that's part of ESG. Governance is not just if you do good boards. It's beyond that, diversity, inclusion. So all of that compass, it's very important for everyone. And let's answer practically why it matters. Number one, if you're a corporation, you raise money. If you're going to raise money in the equity markets, ECM, right, you're going to have investors to invest in you. They will avoid you. 78% of institutional investors will not touch a corporate without an ESG compass. So you're excluded. If you're going to raise debt, you're going to be able to get cheaper cost of capital. If you're going to do M&A, your valuation will be down to what you're doing as a corporation, as an investor. So the system is integrated. The big asset allocators are enforcing in the selection of investors on the GPs, as I call in my industry, and the funds are enforcing it to the allocation and choice of the corporations they choose. And a well-oiled machine, we all know, usually it performs better not only for people, not only for the planet, but substantially in the commercial environment for profits. So for us, that's the bottom line.
Okay. Dimitri, I would like to hear your view on that. What do investors need to do to promote the sustainability agenda?
As a global asset manager, we see our role having a stewardship role to really drive the change of companies' thinking, of investors' thinking. And it's not only the part of ESG, it's also the other part of the investment. And you really have to understand, first of all, what sustainability is. And for us at Schroder's, sustainability is something where if we want to invest sustainable, we really want to see the company in the middle, and around the company, we really want to have the stakeholders. And the interest of the company should be to all stakeholders, not only to the shareholders. And stakeholders for us are not only the clients, they are also the regulators, it's also the shareholders, of course, it's the employees, it's the society itself. So it's a diversity of, let's say, stakeholders, where really if you as a company try to engage with them, you really will drive long-term performance. And this is exactly what we want to see as an asset manager. And in these companies where actually the tendency is not that big of companies driving stakeholder interest, we see our role to really engage with these companies, to really drive the change, the thinking, to really get the companies to adjust their DNA, to look forward in the future, and not only look on results and on the earnings itself. So important for me personally is that people first of all understand what sustainability is really about, and implementing these together with the ESG criteria, which we think is very important, and that's why we have been implementing ESG filters to all our investments. So no matter if we talk here about traditional equities, we run all our investors through ESG. So looking back at the history of the industry itself, and as I was pointing out in the first question, I think this is not just a trend. And especially, during this COVID lockdown, a lot of people said, okay, we lost actually the contact with sustainability and ESG. I don't share the same opinion. I would rather say that now it is even more important if you see the society, how they reacted during COVID lockdown. Mm-hmm. So overall, it's something which will have its own drive, its own speed, but supportive through the asset managers and the investor understanding. I think this will be the key for the success.
Mm-hmm. Okay, thank you. I couldn't agree more with all of you. Indeed, investors will play a critical role through responsible investment decision, engagement with companies and all stakeholders, and pushing executives to be accountable on ESG issues. And I would like to draw your attention to the findings of a study published recently by the consultancy firm Boston Consulting Group and Business School in SEAD, examining the role boards are playing in overseeing ESG. They found that there's a growing focus from directors on sustainability topics, concluding that ESG is becoming mainstream. Among the results to the question of why directors are not effective at governing ESG issues, 44% of the respondents indicated the lack of knowledge of data and capabilities as the principal reason. So I would like to turn to all of you on this issue. Paul, would you say that analysts, fund managers, and board directors are appropriately educated on the rapidly changing ESG landscape?
No, it's a great question, and it's one of the main reasons why I actually joined the CFA Institute. When I worked in this industry, say, for over 20 years, one of the biggest inhibitors was the lack of knowledge, the lack of understanding. And of course, there's a competitive environment where groups where they have a competitive advantage in terms of analysing companies, looking at environmental and social risk, want to keep that information to themselves. As a result of that, now the industry has exploded. There's a really shortage of expertise. And the CFA Institute is in a unique place as a not-for-profit organisation and also not representing any trade body, to try and help democratize that information, help the understanding so you can analyze companies and actually look at the value created. So we've seen absolutely phenomenal interest in our ESG certificate, and we're about to launch a climate certificate to follow up on that for people who want to get more into depth in that area. And we see that form of learning a great way to help people make better decisions and better analyze companies and share that, so you've got a common message to the markets to influence that change.
Omiros, are investors properly educated on ESG issue?
I think the CFA is leading the agenda by far and large. The CFA Society in the UK started a level 4 for ESG 3 years ago. We were amongst the first to actually adopt it. Last year, CFA Institute took it on board overall globally. So I think that will help a lot, because CFA is the pinnacle of finance for education and training. And I think overall what will happen is that we're going to implement ESG in our fiduciary duties. So when you join the board of directors, it's not just a title, but I think will also become a large training. So I have the honor to be on the livery of bankers, which represents probably most of the CEOs in the City of London, and I sit on the coordinating of the ESG committee. And I think that the agenda is driven at a very high level. But if we go down now to the average SME in Greece, or the venture fund, or the startup, I think because we have an opportunity to get things right from the first day, when we build a company, we will go across this list, how do we make a company successful? And having the ESG integration in our firm, I think will become one of the checkpoints of what will make a company successful, both as a startup and as a scale-up and as a large corporation rewarded by investors in the stock market.
I would like to hear Dimitrios' insights for this question, considering that he also holds the CFA certificate of ESG investing.
Well, actually, the good part is that it was very interesting, the CFA ESG, but also very challenging. And since I'm responsible, and I'm ESG representative for 16 countries at Schroder's, and having also passed the exam with CFA ESG, it showed me actually that there are so many things which you cannot cover in your daily business, and also through just investing. And one of the important lessons I learned also through CFA ESG, but also through my role now, is it's not the E, S, or G which is separate important, it's a combination. And especially if you don't have a good governance, then the potential that E and S will be downgraded is very high. So it is a balance, if you want, to really have an outcome on all three silos, if you want, on all three buckets. And for us, I mean, the governance itself, it's something which replicates a company's DNA, and where, as also you said, you know, it is very important, and it's coming up from the board directors first of all, and then it's implemented into the structure of the company. And overall, then you can really have or drive the changes, the externalities, which I just spoke about on the E and the S.
Okay, you have coherently mentioned all the benefits of training professionals on ESG topics. As more and more individuals are gaining ESG knowledge and enhancing their skills, positive long-term outcomes are being created in society. Precisely, the CFA certificate of ESG investing is a must-have global qualification for every individual. Back to the latest development derived from the Russian-Ukraine war and the elevated energy price we have encountered lately. Has the recent energy crisis pushed companies to pull back from their commitments to energy transition, or has it made them globalize investments in the green transition? Just a small comment, because we are running short of time. Paul, what are your thoughts on that question?
So I think there are two answers to that. Short term, you've seen a need because there is an immediate shortage in terms of gas and oil in the markets, that you're seeing an increased usage of dirty energy sources, in particular coal. However, medium and long term, this is going to really force the transition. And I've never seen such activity taking place across governments around the globe as people are looking to develop renewable energy, partly because of the climate crisis, but also wholly consistent with mitigating that geopolitical risk. So you've got two things that are acting as an impetus here. So long term, I can see a really dramatic change across a number of the European markets already in what's happening.
And Omiros, please.
Thank you.
The floor is yours.
About 2 weeks ago, I was sitting on a similar chair at the London Stock Exchange. And the panel before, it was most interesting because they were the heads of an organization which invests very heavily in what we would call the old technologies. And at the other side, it was the new green tech. And I think there was, we need energy and we need it now. So that's the reality check, right? We need to make actions now. But as I said before, for me, ESG is far beyond just environmental issues. It's a whole integration. It's a whole approach. So how I'm going to do business. I think we're going to certainly invest for the future. The world is going to environmental and sustainable investments. Whatever pullback we're going to have because of what's happening right now, it's going to be caught up later. But I think overall, we need to escape that ESG is green. ESG is about a whole set of issues, which is, it's about how to make a better business, a sustainable, profitable business, and also how to make impact.
And Dimitri, what's your view on that, please?
So my and Schroder's views on that is it's very critical, the decarbonization of not only the investment landscape, but overall of industries. And I think when you look on the energy transition phase, and also the targets and objectives we want to reach to get things done in combination with the climate change, with the Paris Agreement, it's very, very tough. But one thing is clear: we need really to invest here in this area, because otherwise we really come into struggle not only through stranded assets, as I said, but also in terms of not reaching the targets. And I think looking at the industry as an energy transition, it's not only just the production of energy, of green energy. Most importantly, and what we really need now, is the transport of this green energy, and most importantly, how we can store this energy to really get this on the networks. And we are very active here, and we couldn't do more commitment here through our merger with Green Code currently.
Okay, thank you all for your contribution. We had a very fruitful conversation. I think we have a few minutes left, so I would like to turn to each one of you for just a concluding remark, just one sentence, a short sentence. Please, Paul, what's after our conversation? What is your message you want to send to our audience?
The one message I would say is the time's now. The industry we all have to galvanise and do our part if we're going to save the planet. There isn't a second option. We can't delay.
Okay, and Omiros, what's your message?
Get educated on it fast. It's going to matter.
That's good one.
Yeah. And Dimitrios,
I
please.
think no matter what we will do, the change will come.
Okay, thank you all. Now, let me briefly summarize some key conclusions of today's discussion. ESG has become mainstream in the investment industry. The pace at which companies, investors, customers, and employees, all stakeholders, are addressing it is rapidly growing. Embracing ESG practices is a challenging mission, but its benefits will far outweigh the costs implied. Investors, company executives, and asset owners will need to be educated on ESG so that they are able to integrate ESG factors in their investment and business strategy and drive positive outcomes for the ultimate benefit of society, as CFA Institute's mission actually states. Paul, Dimitrios, and Omiros, I would like to sincerely thank you all for your influence and contribution to our panel discussion. Your comments are truly thought-provoking. Okay, and I would like also to thank our audience for their attendance. Thank you all.
Thank you.